Real Country 1430 AM and 107.3 FM WRDN. I'm Brian Winnikins from the NAFB convention, and thank you to our sponsors, including Animal Wellness Center of Buffalo Valley, Wisconsin Corn Growers Association, Synergy Co-op, Wisconsin Farmers Union, and Osteoplastics. Joining us right now, Kent Beadle from CHS. Talk a little bit about end-of-year planning and also next year as well, doing some hedging. And Kent, thank you for joining us this morning. Well, with this end of year coming up and the way the markets have been, what are some things that producers really need to be doing to not only plan for the end of the year, because we got the tax thing, but then also to position themselves for next year, because there's still a lot of unknowns out there?
Well, a lot of unknowns, and a lot higher cost structure for next year. So, the first thing that we need to be doing is taking a look at those costs and our current futures markets, and coming up with a plan as to what sort of price do we need in order to not only cover those costs, but to make a return on our operation, on our work. And so, that's the kind of work that we're doing right now, is going out, sitting down with the farmer, looking at their balance sheet, income statement, cash flow, and determining, what are the gross dollars per acre that we need to make an appropriate return on assets and equity. And that becomes the plan that we try to market to over the course of the next year. So right now you have these 22 corn futures at a little over $5.50 a bushel. That's a really good price. But you have fertilizer prices that are 2 to 3 times what they have been. You've got rental negotiations that are ongoing right now, and many of those are coming in a little bit higher in order to maintain the land base. And you have chemical issues too. There's the supply chain has driven up costs of normal ag chemicals, and got to know what those costs are so that we can make a plan as to how we're going to go forward with our marketing. You mentioned the old crop and the tax situation. Of course, that's usually a conversation with the accountant. Where is our income to date? Where do we need it to be? Do we need to take some additional expense this year? That's not hard to do with the cost of fertilizer, of course. But that's kind of normal end-of-year planning that most growers do, is to, do we sell some grain now? Do we need some additional income, or do we need to have some income deferred? Okay.
You mentioned, the maybe getting fertilizer now or getting some inputs now. Can that do the double of, one, helping with the tax situation, but two, potentially helping with the cost situation on the other end in 2022?
Well, we've actually seen that already happen, and I think a lot of our growers knew that they were going to need some additional expense this year, and as a result, there's an awful lot of fertilizer that's already been purchased, and a lot of it was purchased at prices a lot lower than what we see today. So it turned out to be a very good thing for the grower who planned that far ahead. But it is something that growers need to take a look at as you get to year end, is what's the overall situation for income and expense, and where do you need to be?
Once you figure some of that stuff out as well, how can producers protect that or hedge that so that they can protect, okay, this is what I need, so how do I protect it?
Yeah, so in order to protect the prices that we have today to guarantee the revenue in the future, you need to either sell grain, physical grain, to the elevator, or you can protect using futures by selling futures. You can also use option strategies. Buying puts is the most common. You can buy puts and sell calls to make that a little bit cheaper. That's what we call a fence. It gives you a window of pricing opportunity. You even can get a little more advanced and buy put spreads, which lock in a certain portion of profitability on the curve, and sell those calls up above, and then you can get the cost of that protection very inexpensive. Each one of those strategies has its different risk-reward profile, and you need to understand what that really means, and that's what you get when you work with a broker like the ones we have at CHS Hedging.
And again, you can find out more as well by visiting the CHS website as well and find out more. That's Kent Beadle rather, with the CHS and CHS hedging from NAFB convention in Kansas City. I'm Brian Winnikins for WRDN.